Well, that's a really great question. Okay. And so I'll tell you what happens with that.
It's a really great question. This is getting real
because everyone super real. Yeah, everyone's thinking that same thing. They're like, well, why doesn't he just keep all the deals for himself?
This is Real Estate Empires, the absolute no nonsense or fluff podcast with tips and tricks to build your own ultimate real estate empire, where we talk about how to achieve multiple streams of income through real estate. And now, here's your real estate expert and insider, your host, Mark Blair.
Hey, this is Mark Blair at Real Estate Empires, bringing you back for episode number 3 in season 1. And I have my selected guest of the night here. And this is Paul Singh, live from Toronto.
Hello, Mark Blair. This is Paul. It's so nice to be here on this podcast today with you. It's just so nice to actually have us speaking from different cities. I'm actually in Toronto and you're in Michigan. And
hey, it's really cool, man. I'm just glad we can get together, regardless of the distance. And this is one of the nicest things about podcasting and virtual interviewing, where we can be anywhere and just bring on guests from different cities. And I'm glad that people on YouTube can watch this channel and follow our podcast recordings as well, and then also listen to them over Anchor, Spotify, and on Apple Podcasts as well.
Yeah, in fact, I actually ended up downloading the Anchor app and listening to the podcast on that. And I was actually really blown away by the quality of that first episode that you put out.
Yeah, I think it's incredible. I actually share it within my podcast. It tells you how to download the app, where to get it from. It's totally free, and I think it's really easy to use. I think everybody who's got something to say and they want to share some useful content, you should definitely start doing it.
We've known each other for so long, but to just hear your voice through that medium, like, totally changed my own perspective. I was like, this is Mark. I've known him for so long, but when I heard you on this, it just felt like I was listening to like another Gary Vaynerchuk or Tony Robbins or, one of those, these magnanimous speakers that you find online. And it just kind of had that vibe. So I was like, wow. And,
hey, Paul, you want to know what the cool thing is about this? I actually have thought about doing this for a long time. I've just been genuinely really busy. Okay. And so when I found this app, I liked it because it was super easy. I started doing it. I'm like, hey, you know what? I'm going to just do this. So once this lockdown started and we had more time at home, I promised myself I'd do it. I just started working on it. And so that was kind of cool, and I love people that share good content, something you can take away, something you can do, apply it to some situation in your life and actually improve it. Right. So, excuse me, a lot of times I get a lot of people saying, hey, I'm tired of people telling me how much experience they have out there. Hey, listen, there's a good thing to take away from that. Turn to that person and use them as a mentor. Listen to their wisdom. They've experienced a few things. Yes, I understand a lot of people don't like the value proposition when someone says, hey, I've been doing this business for 25 years and you should do what I say. No, that's not correct. It's all about the reputation you've earned, the reviews you've got, the business you've accomplished. There's so many more facets to it. Okay. So I think that what people need to understand is that when a podcast or content's created, that this is an opportunity for you to learn for free from someone that you want to be mentored with. Or mentored by. It's your choice of selection at that point. So this can turn into something extremely valuable for you and your business.
Right. And I think just because I've known you from over the years, I realize that whenever you give advice or whenever I've seen you talk to other investors and other people, you've always been very, very genuine and kind of looked at, their situation, their context. So now if even for like a newbie like me, I'm in Toronto right now. I don't think I introduced myself actually properly, but I'm actually a creative director. I live in downtown and I've had some success from a professional standpoint. But as a new investor and to become solid financially, I feel that I need to, get my ducks in a row. And I did actually spend some time online, listen to a whole bunch of different perspectives. And you know what? At the end, I felt like the more information I got more confused.
You had information overload.
Yeah. And I was like, holy shit, where do I actually begin now? And so I would actually pose the question to you, knowing that, you're going to give me that honest, candid, simple advice. So for a new investor like me, a first time investor with only maybe just one apartment on my name on rent, which is local. But if I wanted to kind of get into this American market, I think that's something that you deeply expertise in. So where would I start and what would be my first step here?
So, what I think it is it's good to understand and look at the past examples. So I've serviced a lot of clients that come to me internationally. So a lot come from Canada. So I'd be happy to share a lot of the things that they've looked at and considered. I like to keep a lot of my clients' information really private, but our transactions here are public record. So there's no problem with me showing you deals that we bought for less, sold for higher, and that are on that platform of what an investor should be considering, the way they should be going about it. I have international investors that have very different preferences when it comes down to what they want to buy, how they want to buy, and what type of property they're after. So I think what it comes down to is initializing to understand what your goals are. So if your goal is to buy and hold and have a fixed income, and you want to build a portfolio over time and have a professional property management in place and look at the net return to see if that's worth your time, that's one option. There's several other options where you can jump into the game and say, let me partner up with someone who's a local contractor because I'm not going to be local. So who's going to take care of the property? I want someone with a long-term reputation I can maybe partner up with or work with under some kind of contract form, and I can flip properties and turn a revenue. Because you're so close from Toronto, like you're only a 3.5, 4-hour drive to come down to Southeast Michigan where we're at, and we can show you areas that you can easily get comfortable with, and I can show you areas that have performed the best during the recession and really break down that recession analysis and show you like where your comfort level is. So this is all about you. Every job that I do with an investor is totally custom. And if it's not me that you're working with, find somebody who's working on that level to make sure that your needs are met when it comes to real estate investing. But there's a lot of easy ways to just jump into this market and get going. It's a lot easier than working deals that you can do in Toronto. Toronto's, lending factors, and Ontario, Canada, all these other factors that are involved. There's a lot of red tape when it comes to investors jumping into the game. Okay, especially if you're a newbie. But from where I'm standing right now, I can definitely tell you that as a new investor, there's tremendous amount of opportunity that you can minimize your risk as well by showing and understanding that and studying the factors that make sense. So say, for example, I'm going to say, for you, Paul, and your comfort level, hypothetically, we're only going to look and shop properties that are in a high performing school district that can protect your investment. Okay. So we might choose a factor, or we might choose an item that's going to help you understand why you're going to go down that road and what your plan is going to look like. So luckily I've been through the shifts. I've been doing real estate for a long time. And that's not just talking about experience. It's talking about going through such crazy different situations from one client to another. But one thing that I can tell you, because of the approach that I've taken and the wonderful mentors I was so blessed to have in my career, I can tell you for a fact, and on through any public record forum, through any investor testimony, that I've always directed my investors to be a little bit more conservative than others so that they never end up losing or being upside down.
Right. Wow. So I
hope your head didn't just blow off there with all that information. That was a little bit of you just complained about being overloaded, and there I came and overloaded you some more.
No, there's just so much information to unpack, but I'm loving it. I think there was a lot of different elements and components of what I would need to think about. Like, for example, you mentioned that there's going to be, properties in school districts or near schools, with high, less risk, I would say.
Right.
Now, I like one of my follow-up questions to this, all this would be that now, because I kind of looked at different ways to get started building my financial empire, so to speak,
Absolutely.
There was conversations around, investing in stock and bonds, and there's all. So what is actually the difference between going that direction versus going into actually real estate? Because even if, let's say, I did want to go into real estate, I want to make sure that I'm making a sound decision.
Right.
And it is the best decision to put my money in versus going some other potential option.
I think when you break it down, like, I'm not a stocks expert, so I can't really give you advice on that. But what I've heard from a lot of people is that some that make money are really well versed in the information, and the ones that don't make a lot of money just went in there thinking they would easily make quick money, and it didn't really work out that way. So when it comes down to any kind of investing I've ever done in my own life, and if I just share my own personal experience with you, real estate consistently makes people money if it's done the right way. So you need a great agent. You need a great investment agent who understands that. Okay. And then you have to look at the fact that you can look at Hollywood actors. You can look at any type of person in any industry who makes more money than they do in their job is always almost, I think 90% of the time from the research that I've done, is translated to some form of real estate transaction. So when I was checking out some information on some Hollywood stars that were trying to get acting jobs and they had to have that time period hold them over financially, they were flipping real estate. And so flipping real estate is something I've taught, I've done, and I guess it's a passion for me to teach others because I just can't help myself. I love talking about it. I want people to do it the right way. It's the saddest thing you can see is someone who's doing all the right steps and they're still getting, screwed, and that sucks. So the reason why I started to open up my content with people that were interested in investing was I wanted to remove the fluff, the nonsense, and the BS, and get right to the point so they could make the right investment. I don't really believe you should get into like a lot of syndicate investments when you're new. I think that's a terrible idea when you're a new investor. I think as a new investor, you should have a syndicate investment is where you're basically buying like in a group of people and you don't have the full control. So I really think that when you're a newbie and you need to like really get your feet wet, and you need to learn, you need to invest directly yourself and maybe have one odd or two partners. One of my first investment properties I did myself, but following that, I actually partnered up with two of my friends and it worked out pretty interesting. Okay. And so what I mean by that was that definitely didn't go the way I thought it was going to go. It wasn't as smooth, but we all ended up making money because we chose the right property with the right research and the right numbers. So if you're talking to an investment-minded agent, you don't have to tell me to find you a property at 50 cents on the dollar. I already know that. But luckily for you, I have the resources to find those properties for you that which you might not be able to find through a traditional real estate agent. So what I was going to say was that your question was around like which one should you consider? I think the one to consider is where you have the most leverage with the right person directing you into that investment. So say, for example, if I find you a property that is, at an auction or it's at a tax sale or whatever the case is, it doesn't really matter. But the point is that we're going back to say 2008 and you say, well, if the market was in that kind of recession we experienced before, so what does my risk look like if we went back right into that same time? And I could do an analysis for you and give you that information.
Right. So in that case, so I hear you loud and clear. So you would recommend going the real estate route. And it does kind of make more sense that at least you can see what you're investing, because there is this tangible element of getting into real estate, because you're like, yeah, that's that piece of land or that's that piece of property that I actually own, versus seeing some numbers on a screen.
Well, the golden rule is land never grows itself. Like land's not going to keep growing. Land's going to stop at a point of when it's not able to be supplied anymore. So once you buy land in a city and that city's all built up, there's no more land for sale. That's not used, right? Like it's already developed, right? So you experienced that in Toronto really thoroughly. Like you understand exactly what I'm saying. So that golden rule, that's why a lot of investors and builders, they buy land and hold on to it for 5, 10, 20 years or whatever it is. And then you see them cash out. It's like putting money in a savings account and then seeing it, multiply like crazy. because land
Right.
is going to become scarce at a certain point.
Right.
You got more
right.
people coming, more people booming, more people's lives changing, more situations changing. There's just so much going on. Like, did you ever think 30 years ago there was going to be all these warehouses for Amazon? Probably not, right?
Yeah.
So you didn't know that
Killing it.
land you were holding on to for commercial warehouse could be valued and used for something that for a long-term tenant that would pay that kind of money. Right? Same thing when it comes to Tim Hortons. There's so many Tim Hortons, and you didn't know that if you had bought that commercial land, like that would have paid off. You would have got a 99 or 100-year lease from them. Like you got to talk about like a guaranteed paycheck coming in. Like there's COVID, there's pandemic. People are still buying coffee. So people are still shopping on Amazon. So there's certain aspects of real estate that if you are moving along and you're modernizing your rethinking and planning as you move forward with a realtor, that is staying on top of things like that. And that's going to be hard to find guys like that. And but when you do, hold on to them. Right.
So in that case, are there actually different types of investments when it comes to real estate? Because I think you talked about one is that you would have cash flow right away. One is because from what I understand is that, okay, I could buy a piece of land, but if nobody actually ever takes up that land, then I'm just paying for that land. Versus, I think the situation where you described where I would have some sort of positive cash flow from that investment, like immediately, versus like holding on to it and then selling it after like a couple of years.
Yeah. So it just matters. It just boils down to what your actual plan is. And it boils down to what your situation is. So if you sit down with me, for example, and you say, hey, Mark, I want to, get married in 5 years and I want to build my own custom home. I'm looking at about this much money is what I need. And so we would build a plan around that, given what you're working with, given what your circumstances are, and we would come up with a plan that would translate to make sense.
Right. So I'm sure there are a lot of other folks out there like me who potentially have a decent job and have some spare income, have potentially like one property, as a backup, just in case. Right. So what are some of the steps, or how many steps, or what are the things that I need to start thinking about even before making that first move? Or is my first step to actually start talking to somebody? So I'm actually not sure where to actually still begin.
All right. So let's make it real simple. So before, as a Canadian, so you want to start buying property in the United States, you're going to first start off by opening an LLC. Now, I'm not an accountant or a CPA. There's a disclosure right there for you. But for example, let's just say you decided it was Michigan. You can go to, there's a lot of online websites that help you walk you through opening your LLC. That becomes your business. A lot of tax attorneys and lawyers recommend you individualize those properties according to equity. And that's another conversation in itself later on. We have a podcast coming up on that to break that down. But for now, the simple step would be, hey, open up the LLC, call the IRS, get your EIN number. So you got a tax ID, then open up your bank account, move your money from Canada or wherever you're at into the business account and start shopping for property. Okay. Because you have a plan, you have a plan to pull off something. You need to have the steps and process to what you're going to do to get to that. Ideally, if you have all of your ducks in a row, like you said, and when a property comes up and say you moved your money over and we find a sweet deal that you want to buy, you're ready to go.
Right. So actually my first step is to set up a business account and LLC, to your point. So that would actually be my first step if I wanted to actually go down this path and not. Right. So is there a difference between me being the owner versus the company being a business? Like, is there a difference between those?
Well, a lot of
people,
an advantage? Yeah, there's a couple of things. And like I said, I'm not an attorney. I'm not an accountant. As I hear that again, but a lot of people are going to want to have an LLC for liability. They're not going to want to get sued personally. I think you still can. It just all depends on the situation. But it's about minimizing risk and minimizing your tax liability too, because your taxes will be different. So once you talk to your accountant and your attorney, you can figure those out. And if you need one, I can recommend a list of preferred service providers that a lot of our international investors have really, really liked, and they highly recommend them themselves.
Right. So if I was to actually come straight to you, you could actually even just point me to the right person who could give me that advice.
Yeah, I have my clients review service providers as well, so they give us feedback, and I'm always happy to share it. And you can and basically, it's like anything you're choosing. It's kind of like you're matching your personality. You want to make sure you work well with that person, you get along with that person, and you guys see eye to eye. I think you have to choose your service provider. And it's okay if you have 5 people and you're making a big investment. Hey, take the couple of minutes and do an interview and make sure that you're comfortable with that person, so you don't turn into this whole like you can't get along at the end, So it makes more sense to make sure that when you're getting in business with somebody, make sure that their personality it has a match, and you folks really are working efficiently together. So maybe like check out the organizational skills, check out the feedback, check out to see how long it takes that person to return a phone call or an email. And if that bugs you from the beginning, be selective. You partner up with good people. That you're building an investment team. You need to have good people around you. And so you're going to have to be selective. It's going to take a minute, but do it. It's worth it.
Right. So I would say that kind of that first step would be to start interviewing people, get those right people involved, giving me the best of advice in terms of the accountant and potentially a lawyer. And then step 2 would be to set up that LLC with a business account. And then what would be my third step then?
So then in the interim, while you're setting up all of your logistics of your business, because you're setting up a business, right? So a part of your business model is to understand what are you trying to accomplish. So that's where I can sit down and help you and give you some direction based on what your goals are. And then if you explain to me that your goal is to say buy 2 rental properties before the next year, we're going to sit down and hammer down on that goal. We're going to look at rental properties. We're going to look at opportunities with where maybe you might get some seller financing, so you can put a little bit of money down and just finance the property. You might look at opportunities where it's such a sweet deal that you want to buy it in cash and you want to refinance it later. In your case, you might have to file taxes for a couple of years, and then you can get some financing locally, or we can look at some other finance options as well. So I think that time is best used, like your downtime, is to study and learn the areas and the type of properties that you want to focus on, and we work as a team together, because it's not my role to make the decision on the property. It's my role to help you find them and locate them and understand them, and then you have to be the one to decide, is that the one you want to buy?
Right. You find the target and I pull the trigger.
Absolutely, yeah.
So speaking of finances and investing and all that, you were talking about, getting potentially some sort of funding. Like as a newbie investor, is there like a minimum amount that I need to have, like cash sitting with me, liquid cash to get started? Or is there a cutoff point, or is there like, what would be an ideal amount to have ready to go when I'm ready to go down this path?
Well, I can tell you both sides of the coin, okay? Because I've seen folks get a property with very little money down, like $1,500 to $2,000 down, which is really nothing to buy a property, and then they achieve some seller financing. And I look back and think, like, heck, maybe I should have bought that deal. But that's okay. I'm not here to buy every deal, luckily for you and luckily for other people. But the cool thing is there's just so much opportunity, and it's never ending. And I think that, like, it's very, very important that you understand what your threshold is to manage your portfolio. So I have a good idea of that. I've done it for a long time. So I'm not going to buy every single deal just because I like to sleep at night. And there's a point for me, which makes sense. And then I'm good. So I love sharing that with other people so they can do the same thing. And I hope that they choose healthy towards making a good decision and keeping that threshold to a maximum amount of properties that they want to hold. And like, hey, like I've started with investors that bought like 3 properties with me, and today they own like 74 properties. And
holy shit, 74 properties.
Yeah, they've left their full-time job. I have several investors that actually have done this with me where they've left their full-time job and all they're really doing is managing their properties and talking about them, writing books now. And they're also dabbling into, this is one of the best parts, they're also dabbling into the actual passion of a career or hobby that they wanted to do that they couldn't do because they had that job. So this is not just about real estate. It's all about freedom. It's about structure. It's about living your dream out, having something to fall back on. So the question that you asked me before, I'm going to go back to that for a quick second. You said, hey, would you buy real estate or stocks? So for me particularly, I know there's a lot of great stocks and I know they make a lot of great money, vice versa, good and bad. But with real estate, you always have that brick and mortar. You can, if I'm not doing anything with it and the economy's not as great, I'm going to rent it out for a little bit less, but I'm always making some money. So if I buy that property right and I did my recession analysis correctly, I don't have to panic. Like even in this pandemic that we went through right now, we're renting out properties at a higher price that they rented out for before because people desperately need a home and they're willing to pay for a good home because now they're home a lot. So like it's interesting to see how that is playing out, and my investors are like, oh, everything you said, it's working out just the way you said. And I'm not saying I'm Nostradamus here to give you this prediction about the future. I'm not doing that. I'm just saying when you base things on education and experience and you share the correct information, your investor, your partners make better decisions, just like anything in life. When you have all the facts in front of you, you have all of the truths in front of you, without the fluff, without the BS, you can make really good decisions. But nothing's perfect or guaranteed in life. But hey, look at the track record. That's going to speak for itself.
So going back to one of the points that you brought up earlier, that there is that happy spot where you know that this is the number of properties or this is the amount of risk I should take. So how does that kind of work? Like in terms of what would be my potentially risk appetite for somebody like me? What would you recommend? Should I think about just getting that one property first, or should I be thinking about kind of spreading out?
Well, this is what I honestly think. So like when I first started, the first thing I did was just buy one property. Okay. I bought one. I rented it for the first time as a first-time landlord. Then I decided to flip the property. It was a first-time flipper. And that taught me a few things that I wouldn't do the next time. So my point is when you start with one, you learn a few lessons, you translate it into the second experience, and you do those things differently, and you just get better and better. Now, let's just say before you get into something like you said, that question, should you start with a whole bunch or maybe just one? I think you should start with one and start snowballing that effect, because then you're going to become more and more experienced and you're going to be able to handle a lot more situations correctly according to your way of doing things. And that's going to make you a better investor. And it's going to allow your appetite to take on more properties and manage them the right way without being overwhelmed and without running yourself into the ground. Because the point of the investment is to create freedom. So if you don't have a system in place, it could pretty much blow up in your face and be a chaotic mess where you get desperate and want to dump the properties for cheap because you didn't set up systems correctly. So you don't want to fall on your face. Yeah, you don't want to fall on your face. You want to right. You basically what you do want is you want to create a system with mentorship, education, and all the right things, and go through the process, because there's no better way to manage your investment business than you going through the things. So when you hire somebody to delegate the tasks later on, you're going to be an expert and you already know what their job is. Because if you don't know what their job is, how the heck are you going to manage them again? You're not. You're not going to do it efficiently. You're just going to be told a bunch of BS. You're going to be probably running around in circles, and you're going to say, "Whoa, this is so hard. I don't understand why this is not working for me."
Right. So if I was to kind of double, go ahead. I was
just going to say that's the only way I think you should consider it, at least in the beginning.
So if I was to kind of double click into what you just said and kind of, if we were to dissect it a little bit more, because that when you were describing that as a newbie, I was starting to feel a little bit like, oh shit, okay, this seems like a lot of work. Will I have to actually drive down to my properties? How will they get managed? Who's going to do all that? And if I have to do all that, how much work is that? Can I do it remotely, virtually? So how much headache would I have? Not headache, or I would say how much work would be involved? How many hours in a week, or how much time would I need to put into these? I mean, I understand maybe potentially there's an upfront. I might have to put in more time, but then over time, it kind of on that graph, it begins to dip and then just kind of
flatten out. Yeah, I know what you're saying.
Yeah.
So the answer to that question is that you've got to put work into anything that's worth working for. That saying of good old fashioned hard work, I think that's the best thing in the whole universe. Okay. When it comes down to doing business. So if anybody's looking for like a shortcut, an easy way, you better go do something else. That's not going to work. Like good old fashioned hard work here is going to very much pay off. Okay.
Right.
And so how can I say that? I've only helped thousands of people do it over and over again.
Mm-hmm.
So I can very much say that factually and by proof through experience. Okay. So what I would say to you is that be prepared to manage your business. So if it takes you, if you're detail orientated and you're very picky and you go through things, like a fine tooth comb, you might spend a little bit more time than the guy that says, all right, cool, I'm just passing this on the property manager. Shoot me a report every biweekly. Let me know when my income's coming in. Let me know about any issues and repairs you had with the tenant. So if you treat it like a boss and you're going to treat it like a CEO, you might say like, hey, when it's 8 a.m. morning coffee on the 15th of the month, I want my property manager to send me a report so I can make decisions in the middle of the month, towards the end of the month, to know what my cash flow is going to look like before I get hit with a surprise.
Right.
So now you're going to change your mindset from, okay, so you're in a different line of work right now. So you might be on an hourly wage or a salary or a contract. When you're managing your business, your mindset has to be completely different. Now you're looking at it like, I need to manage everything efficiently and keep it running lean. And every decision I make has to be a sensible, economical, good provisional planning decision, so that I'm either creating reserves for when I have a downtime, so I never have to panic. So people that went through this downtime right now have probably reconsidered that saying, you should have 6 months of savings in place.
Mm-hmm.
Yeah, you should. Why not? And if you don't, you can make changes in your life so you can try to. It's not a perfect plan, but please try to find one so that you don't have to be just sideswiped all the time when situations come up and you're not ready for them. So as an investor, that's one thing that you have to change in your lifestyle and your mindset. You have to be prepared and ready to deal with situations as they come up.
Wow, that's actually really helpful, because now that I'm seeing the big picture here, is like, first is you kind of have to think about the people that you want to, engage with and, partner up with, because this is going to be long term. So would you actually advise that in that first step, when we're thinking about, okay, who's the accountant, who's the lawyer, who's the, potentially in my case, it's most likely going to be you, the person that's going to actually help me find those properties. But would I also want to look for like a property manager at that stage, or would that be too early?
No, there's no harm in doing that. I don't manage the properties because my plate is really full in doing what I do right now. But I can recommend you to a group of property managers. And like I said, same thing. I'd prefer that you interview a couple of them and choose the one that you feel that's going to be the best fit for you. And so property managers in Michigan, for example, they have to have a broker's license. So they have some degree of regulation. That gives you more comfort while you're sitting far away. And so I think the main goal is to establish that upfront system with the property manager, saying like, hey man, every 15th, I want to know what's going on. And I don't want surprises towards the end of the month of what the property needs in maintenance. I want to visit every month where I know of any possible upkeep coming up so I can manage my cash flow correctly. Now you own this business. Now your mindset has to adjust to do that.
Right. So in terms of the steps so far, I just want to do a quick recap. and then just kind of come back to this people element. Is that in that first element, first step that I would take is kind of versus find my people, and it would that would include like the lawyer, accountant, the property manager. And I think I want to circle back on like what their fees are and what is that point of where I have enough properties that they pay themselves, like that if they pay kind of them for themselves, that I'm not kind of paying out of my own pocket for those.
Mm-hmm.
I think that would be a good thing that I would want to know, where if I have one property and I have like 4 people on payroll for this, maybe is that even worth it? And then 2 is once I kind of set up that business and you're going to kind of help me gauge, based on my appetite and how much, liquid I have to get started. And then it's the mindset that you talked about. So I do want to circle back on that mindset, but I also want to know in terms of that cost of having all those people help me.
Sure.
Typically how much, maybe not exact numbers I need to know, but at what point does it become, let's say, I forgot the exact word for it, but
well, it might be like necessary or a need to know basis type thing. So like, for example, let's just say hypothetically, you come across a really great property and it was previously owned by an investor. Maybe he's just gotten ready to retire and he's got to offload it. Like there's nobody else that's going to take over the property for this investor. He says, you know what? I'm just going to offload it. It's in decent shape. And you decide to just take it on and pay another property manager who charges you roughly 10% of the rent collected per month to manage your property for you. Okay. So that's one fee that starts up at the moment you purchase that property. Now, when we talk about like a CPA or lawyer, there's a large variation. You can go to high upper end lawyer, pay a lot more dollars per hour versus going to somebody who's a little bit more simplistic and they don't take on as many clients and they, don't, or what, I don't know, whatever the case is there. But there's going to be a variation of fees, and you don't have to necessarily have the attorney hired right on the spot, but you might pay him for 1 hour just to do consultation on how you're structuring or setting up your business in what state and where your bank account is or whatever you're deciding. So those decisions are all between you and your CPA and according to your situation. So there's some people who like to go to Nevada because there's no state tax. Some people go to Florida. There's no state tax. So it all kind of depends like what your goals are. And if you say, you know what, I'm going to drive to Michigan, I'm going to deal with Michigan. So I prefer to have all my business structured in Michigan. Okay. So you can look at the cost of the LLC renewal fee. Every state's got a higher and lower fee. So you can look at different fees per state. So being in one state, even though you pay a little tax, it might be more cost effective to manage it. Right. It all just kind of depends on so many different factors.
Right.
So basically just pick the one that makes more sense for you. And when you file the LLC, if you don't want to spend the money on the attorney, then most likely you'll probably just go with the LLC in the state that you're buying the property in. A lot of people, it's simple as that. So I'm not giving advice on that. I'm just saying that that's one way to look at it. I don't think there's a tremendous amount of fees up front, because if you start with the LLC, you can start getting ready to purchase a property, and then you're really only facing the closing cost. And then if there's any other services required, then you would look at those, and if those would have to be considered. So you don't necessarily, I have a lot of investors who've bought 5-10 properties right up front because they had the cash and they haven't had any other expenses. All they really had to do was open their LLC.
Right.
Yeah.
So on that, again, going back to that mindset now, and I know, of course, like once we actually kind of get into, looking at properties and start getting into this, we can actually have another discussion around specifics of like, how much costs and, what time, at what fee do you have to pay, property taxes and all that stuff. Is there some sort of a handbook or something that I should start reading, or, in terms of that mindset that you talked about, are there things that I need to read or look at or start preparing myself for?
I think the first thing that you should spend your time on is checking out our website. Okay. Like when you're shopping in a county, like I can always, like after we discuss a couple of goals, I think the first thing to do is set up a consultation with a good investment agent. Okay. Whatever city you're aiming at. And then when you set up that consultation, talk about what your goals are and ask that agent to send you market stats and ask that agent to also show you a quick risk analysis from, say, the last recession. So you can like compare the worst case scenario and be prepared for it. So that's where we talk about having that mindset as a business owner and being prepared with like 6 months of reserves. So my suggestion to you before you get into managing a property, I don't think it's wise for you to purchase a property with nothing down. There should be some reserves in case you get into an issue, the plumbing bursts or there's something happens and you're not financially ready to take care of that property. You're also not ready to reap the rewards of that property because you won't be able to afford to keep it. So you do have to be prepared to like consider it like you're kind of marrying the property. Like there's got to be a commitment involved and you're looking to make sure that like you're in it so that it makes sense financially. So once you commit, there's a reward for it too. Later down the line, you have to have an exit strategy of like, are you just collecting rent for a couple of years? Are you going to sell it in year number 5? Like, what's the plan? That's where your mindset and your study is going to focus around. And I can help you, get in touch with resources like that. But the main goal is to first study the market and understand like, what are you doing, and read books that are catered around like cash flow and landlord properties, just understanding like how to be efficient and reading about like methods, and join Facebook groups that focus on that and have experts around that.
So I have, so I think you've given a lot of good starting points. And I think what happens is that when I kind of start thinking about all these things, I'm like, okay, so I'm going to identify some people, set up my business, think about what is my appetite, and also have a bit of a runway, which is, I need to have that initial capital plus about 6 months, kind of think about, I'm actually investing in this property, but to reap the rewards, I have to also take care of the losses, losses being like temporary losses in terms of, if there's like you said, a plumbing leak or the property needs some maintenance or care. So I have to be, it's not just I buy the property, then I forget about it. And then you are right. If that is the thinking that somebody has, then that's not the right business, that you need to actually be involved.
Yeah. You have to have some kind of participation, unless you have somebody that's actually literally just managing it and you don't want to be hands-on, but then you're also leaving everything at the mercy of someone else to take care of. And I don't know if that's the way you want to run your business. That's up to you. I personally wouldn't feel comfortable doing that.
Right. And then in terms of that mindset shift, is that, and I think a lot of people might be able to relate to me because I actually work at a job and I get a paycheck at a biweekly paycheck, and all I'm responsible for is what I need to do. Whereas I think what you described was when you're taking care of a property, you're actually thinking more like a CEO.
Yeah, and you're running a business for sure.
Right. And when that happens, like, what are some of the things in my immediate future that would begin to change, and things I would need to think about? Are there any tips or tricks around that I need to start considering right away? And then actually once all this happens, by the way, sorry, one more question I had was, would I be able to get funding or loans from Canada to invest in the US? Is that something that...
Yeah, there's a possibility of you getting loans. You can get investment loans for properties in Canada from like banks like TD and some other banks that have some programs that allow that. But the down payment amount might be a little bit higher than you would if you could get seller financing. So seller financing is private financing without the bank. They might require 25 to 30% down. That's usually the norm, somewhere around that range. And you would have to obviously appraise the property and have some fees, pay some fees related to that, which is fine as long as it translates all into the big picture of things of what you're doing.
Right.
So the main goal is the best deal that you're ever going to get will be a cash deal. So you might want to consider finding a superb cash deal, paying a lot less, having equity in the home, because when you flip it, you make a lot more money versus getting a loan on a property and just doing it like the long-winded conventional way. Because when you get a deal, usually it's when you got cash. So, and then what you could do after a couple of weeks or months, depending upon which institution you're dealing with, is just go and get refinancing and pull the cash back out.
Right. And I know that there's a lot for me to learn. I mean, to even think about like versus, I think in my mind, when I look at all these steps, I feel like even before I start talking to people, I maybe need to spend the next few months saving up some and have like build a little bit of a pool for myself where I can even go have these conversations. Um, or is it that I should start the conversations and start doing, saving up money on the side?
Well, I think it's going to come down to opportunities that are available. Okay. So let's just say whatever your capital ranges that you're starting with, regardless of that situation, we can visit all the options, compare them, and see which ones that you want to work towards. Because it only makes sense to work towards a goal. If you're just going to make a hypothetical goal in thin air, I don't know how quickly you're going to reach the actual execution of that goal. So it might make more sense to like narrow down and hammer down an actual plan, and then you can work towards that.
Right. So then that begs two different questions, which is one is, so what is currently the market like? And is this like a good time to get started? And two, are there a lot of other people from Toronto or Canada investing in Michigan?
Yeah, so it's always a good time to get started as long as the numbers make sense. That's what it comes down to. So like in any market, there's opportunities in high market, low markets. There's opportunities in every single market. You just have to find the right person to work with. Okay.
Right.
So there's like, I'll give you a quick example. We were looking at properties in Florida for a client of mine, and he had a certain number that he wanted to spend. When we started shopping around, we were told a retail price. All of a sudden, when I came across an agent that was investment based and understood what we were looking for, she said, guess what? I got one person who really, really wants to sell, and they're super motivated. And we ended up saving $30,000 on purchasing a condo down there. And it was fantastic. So, and to answer your second part of that question, is there a lot of investors from Toronto and other places buying right now? We have international investors almost every week calling us and buying with us. Investments are sometimes the only thing that they're actually focusing on for their business. So on that respect, it keeps us so busy. We are actually kind of trying to keep up with the demand. It's usually the opposite issue. So it's always about trying to find more inventory. So for us, that's the hard part, and it's a hard part for a lot of people. So we do spend a tremendous amount of time looking for inventory and finding deals for our investors.
Right. Oh, that's actually a very interesting learning that there are more people ready to invest, and of course I totally understand that to find a good deal it's not going to be easy, but of course that's something that you're going to help us with.
Well, anything good that I've ever worked for and that I know of, it's always requires some work, and it's always worth it when it's done the right way. So it's all about the right thinking, the right planning, and then the right execution of it.
When you were describing that, I realized that because there's so many people looking for properties, and let's say that you've got 6 people or 10 people, looking for properties with you.
Right.
How do you know which property to give to who? Or the other way to ask that question would be, how would I ensure that I get the best property and you wouldn't give it to somebody else?
Well, that's a really great question. Okay. And so I'll tell you what happens with that.
It's a really great question. This is getting real
because everyone's super real. Yeah, everyone's thinking that same thing. They're like, "Well, why doesn't he just keep all the deals for himself?" I physically couldn't, even if I wanted to. It's an overload of work. Okay, I have a healthy capacity. I have like a balance. I actually preach this and teach this constantly. It's all about having a healthy balance in life. So for me, I don't want to work to death. I do want to live comfortable and do well. But that's not the only goals I have in life. I have some other goals that are really important. So to that question of yours, usually, and this sounds pretty funny, but I feel like all of my investors have individual personalities to a point that it even applies to the property. So say, for example, you come down to Michigan for a trip I drive you around and I show you certain areas. You're going to say, I like that area. I don't like that area. I like this area. I want to be here. And it's funny how by the time that we're done looking at what you want to invest in, you're going to have a preference list of like, I only want 2 bedrooms at least. I need one. I want a basement now because I love basements and I only trust properties with a basement. So you're going to have all these personal preferences that are going to come in there in that list. So when a property comes up, I'm going to say, oh, this one doesn't have a basement, so you don't want it. So we'll send it to the other investor who says, I don't care if it has a basement or not. So funny enough, it actually all kind of pans out and works out for everybody. I rarely have a situation where everybody wants the same one because all of their stages are different. So let's say, for example, I get a new one next week, but you bought 3 this week and you're at capacity. You're not buying anymore.
Right.
But in 3 months, you sell all 3 and you're like, I need 3 this week. You become the buyer for those 3 that like, it's so funny. It's almost like there's not a ton of overlapping because everyone has got so much going on in their lives. It's so different across the board. So that's your answer to that. And it'll probably create a lot more comfort actually hearing that. But like I said, the person that's working for you has to be heavily involved in dealing with those types of deals. Otherwise, if it's just a one-off deal, you're going to have everybody fighting over it. And that realtor might just be buying them himself or herself. And then you got no chance of finding anything.
Right.
And the struggle is real.
That actually, so I actually am so intrigued that, that you actually look at properties based on the personality of the investor. That's actually, I actually never even thought of it like that.
I should trademark this before we go any further, but that's a Mark Blair trademark. So like I actually match personalities to people. I match like literally every part of it so that it's a good fit. Matchmaking is the ultimate role of a really good real estate agent or real estate investment agent. You have to match make the personality and comfort level because everyone has a level of comfort. Like you might say like, hey, I want to be an investor. And I drive you down to a certain part of the city and you open the door and run because you're scared. You're like, I don't want to invest here. Well, okay, well, that doesn't work for you. And I can't force you or convince you to buy that area, right?
Yeah.
But if I take you to another part of the city and you're like, yeah, you know what? I'm really comfortable with this area. I like the way this looks. I like the way these numbers look. I like, or whatever it is that you like about it. So it's literally so catered that if you don't spend the time to get to know your investor, you're not going to really help your investor at all to a point. If you want to, like I work off referrals. I don't do any intensive advertising for investors. I literally work off referrals like nonstop with them. So for me, I have to go that extra mile to make sure that it's really, really a good fit for them.
Right. That actually puts me at ease, actually, knowing that, that you're not just going to spray a whole bunch of properties my way. You're actually going to custom tailor and make it bespoke, that whole experience. So now, knowing that you just kind of mentioned that, you work on referrals. So what I'm actually would be curious to know, what is in it for you and how do you, benefit out of all of this by helping? Of course, I know, you and I have known each other for so long and you've always helped me and given me really good advice. Even in this property that I've invested in Toronto, you were there to kind of see through things. Now, if I was to invest in Michigan, and I'm actually trying to ask from the behalf of other audiences and other people who'd be listening to this, who are in a similar situation to mine. So what is it that you kind of take out of this?
Well, there's a lot. So I've done this for a long time. So I think you get to a point where it starts changing for you. Okay. So personally, like when I first started this business and one of my favorite mentors said to me that, hey, I want to teach you this stuff so that you can teach other people to do it the right way so it can actually be sustainable. You know what is really important is if you're a true professional and you've accomplished something that's worth sharing, you should be sharing it with other people. That's what sets you apart from somebody who's just in it for themselves. Like my business model is actually based on helping other people. That's what I do. So when I started this career and I started to make decisions about helping investors learn it the right way, do it the right way, and manage their portfolio the right way, the most important part of this for me was to make sure that they could make this like it's easy to repeat, it's easy to replicate, so that if you were to share it with, I don't know, your children in the future or another family member or friend, you want them to be successful. I don't really know anybody who's interested in seeing people fail, and if you are, you won't last at all, right? That's just how it works. If you want to have a long time referral based reputation, exactly what I've been after, and it's the only thing that works for my business, despite of any other things that I've tried along the way, like in terms of marketing or advertising of different variations. I feel that like helping people has made the largest impact. Like I have clients, I have the same investors calling me from 11 years ago, asking me for advice on even other issues because of the relationships that we've built. I have investors calling me to sell properties to their kids because now they've actually started working and making money, and now they want to do something.
Right.
So what's in it for me is there's a massive satisfaction in creating a high standard of operation in our industry so that people can be good investors. And they know that because of the amount of time and energy I put in my business, they can always come to me for that extra edge of tips and tricks and advice that they normally won't spend their days doing. Okay. So, and I actually love the challenge. I love the challenge of a new client every day needing to do something different. So I've always enjoyed that. And I think that always keeps me going. And if my days were the same and I had to do I had to repeat the same thing, I'd probably be so bored. I don't know. I might start knitting or something crazy. Not that's a bad thing, but I don't know. I don't think I'd really enjoy that time of repetition. I mean, there's certain things in my day that I like to repeat for healthy reasons, but my job, I need it to be super challenging and interesting. It really, because it's a passion of mine, so it's got to be fun. I have fun with it. I enjoy it. Like me and my investors, we spend time talking and meeting up and, just like learning off each other. Like our growth is based on each other. Like I learn things from them too. And so I love that relationship. Right.
So then how often do you actually, how much communication happens between you and your investors, and how regularly do you actually end up, speaking with them or engaging with them? Is it more towards when they're, in that investing phase where they're about to get a property, or how does that actually look, or how does that work?
So let me tell you this. So one of my favorite books is called Millionaire Real Estate Agent. Okay. And it has a component that teaches that if you're looking to have a good relationship with a client investor, you would contact them around 11 to 12 times a year. Okay. Now, when I think about my investors and the ones that are pretty active, I talk to them probably 5 to 11 times a month. So we're pretty regular with our communication. Usually we have something to talk about. I don't usually just pick up the phone and call you just to shoot the breeze unless it's, we got to talk about something, but not opposed to that. But the point is that I'm a pretty busy person. Most of my investors are pretty busy people. So a lot of our communication is business, and it's to the point.
Right. So then is there a cap on the number of people or investors that you take on at a given time, or how do you kind of go about that?
So it's kind of like what I said before to you. Investors have ever changing situations, just literally like just normal life happening. Okay. Like you have investors that say, you know what, everything's good. Been investing for a couple of years. I'm retiring. I'm offloading everything. I'm out of here. It all depends on the situation. I've had investors who said, hey, I bought all these duplexes. I'm getting married. I need to sell a couple because I want to buy a house with my wife and have kids.
Right.
Cool. So it all depends. So with these ever-changing life circumstances, my investors keep shifting and their needs keep changing. So it almost doesn't have a restrictive number. If I feel like I'm operating at capacity, I'm happy to say to a new investor, like, I'm really full right now in operation, I couldn't take you on, but I'm happy to refer you to somebody that I think is an equal.
So Mark, that was actually a really interesting point. I actually love how you described, your passion and how you kind of cater to the ever-changing needs of your investors, and you're cognizant of, how much you take on your plate, because I understand that, like your investors, you're also kind of a busy person. Now, knowing all those things, I'm actually really curious to know, what is a success story that something that you're proud of with an investor, and potentially after that, something that didn't actually go as planned, went sideways, and what you learned from it, and how you came out of that?
Well, it's actually almost a combined story. So this is going to be really fun. You're like, what? Yeah, this is the combined story. So in Michigan, I'm going to say, hold my Verners and watch this.
Okay.
That's the Michigan Ginger Ale, by the way. If you have no idea what I'm talking about.
I have no idea what you're talking about.
Right. When you visit Michigan, you'll find out.
Okay.
So I had an investor who came out of Toronto. Great guy, great family. A very new investor. He had done, I think, an odd flip in a different city. He had actually attended school at some point in his life. He was from Toronto, and he had done some school in Michigan, so he was really attracted to the idea of it. So we started flipping together, and he was making great money. Quick flips were happening. He even became a lender at one point, which was really cool. So he did hard money lending for another investor. So he evolved really fast. So I want to say one thing. I'm super happy if you evolve and you grow and get to the next stage. I'm very happy for you. Luckily, the way my business has always been running, I've always had people that constantly refer more people. Like it's been wonderful. That's been one of the great things about not worrying about people evolving. So I truly am happy when someone evolves. So on the side note of that, so, a lot of times, a lot of realtors would say, I did a lot of tremendous work. I should have that client forever. You don't ever own a client. You don't own people. It doesn't really work like that. So what it comes down to is value proposition and what you can offer and bring to the table. So in the same story, a couple of years later, he evolved to a point where he learned it all himself. He became independent and he started doing it on his own. I'm super proud of him, actually. But one of the sad notes was we had a great flow. Me and him just had wonderful conversations. Our deals were so smooth. So I kind of missed him, to be honest with you. Like, we had a lot of fun doing a lot of good deals together. But he did evolve to a point where he was able to do it himself, and he became a full-time investor. And he literally just left his job. So I am so proud of him. I'm so happy for him. So it was not so much of a negative thing, but it's kind of like a sad part. It's like letting one of my kids grow up and go to college and get married, and I'll never see them again. Well, not as much as I'd like to. So it's kind of like, bye-bye, child. I'll see you at the wedding.
Wow. That is such a cool story that, somebody starts, potentially working with you, and they're kind of getting their feet wet. And then you kind of see them on this journey where they evolve and grow into a smart, independent investor. And then you just have to let them go.
Yeah. Just wipe that tear and say, I'm so proud. You've turned out to be such a great investor.
That is such a beautiful narrative of somebody from beginning to where they are off on their own. Okay. So I guess we can wait before we conclude this conversation. Actually, for people listening, I would, what is the place that need to go to connect with you to get started? What's the web link, or what's the number, or, what's the call to action?
Sure. Call to action is our general real estate website is MI for Michigan, soldteam.com. So misoldteam.com takes you right to our website. It's private. It's confidential. Your information is never shared with anybody. If you need to call or text me, you can reach me at 248-686-4638. And please don't text me after 9 p.m. on Eastern Standard Time. Because I need my beauty sleep.
I know that was definitely not intended towards me. But thank you, Mark. These tips have been so helpful. I've actually learned a lot, and I will just quickly recap them for the audiences, for the people listening. Is that number one is, as a newbie investor from Canada looking to kind of get their feet wet in the American real estate market, is to first think about the people that you're going to be working alongside. That would
build your team. Build your team. Yeah.
Yeah. Building your team. I think I think that's that is where the money is. And the accountant, the lawyer, and potentially a property manager. And then once you kind of have those initial conversations going, you also want to kind of set up your business LLC account to better manage your risk. The other thing is you have to think about your appetite, and you have to also think about in conjunction with that appetite is your mindset, which is you're no longer going to get a biweekly paycheck. You're actually going to be like a CEO where you're taking care, but also reaping the rewards of what you invest in. And you should think about at least a 6-month runway. As
I would agree with that. 6 months of reserves at least.
Yeah. And then the next step, which was to kind of think about, doing your research, reading books on cash flow, also to think about, what's the market stats, what is the risk analysis of that market, just to kind of get a basic understanding of,
yes. And also right? Just to that point, when I said Facebook groups, like when you join them, please, for the love of your own sanity, don't start taking 80,000 courses on investing in real estate. Okay. It's pretty simplified if you can just connect with an excellent, experienced, proven investment agent who can give you guidance, interview them, connect by personality, connect by what you require from that person, and go from there. So don't sign up for a bunch of things until it's a true need. Okay. Right.
Actually, you know what? I actually see that as another episode where you kind of take us through, here are the 5 or 10 courses or things that you should read. These are the 2 books. These are the 2 courses. And that cover the potential, maybe not the depth necessarily.
I know you're asking for yourself, Paul, so I'm happy to do another episode around that for you.
I just want the shortcuts.
Right.
But I'm willing to do the hard work, provided I get the shortest way there.
Right.
All right. So I think that covers it for today. Any concluding final thoughts from your end, Mark?
So I think the most important thing for a newbie investor is to consider where you want to be, what those goals are. So just do a quick little, overview of what you want to get out of investing and make it realistic. It's not winning the lottery. Sometimes, yes, it's going to feel like you are. But if you do win the lottery, then just call me because I'll just sell you a package of 50 properties in one shot and make life really simple. And then that way you're not on that TV show. What did they do with their lottery winnings? Absolutely nothing, right?
Got it.
So no, I think it's really important to clean up your mindset as much as possible. Just focus on the good. Keep your mind very, very positive. Keep yourself very healthy, and just remove all the junk. Don't overload yourself with 1 trillion courses or YouTube videos. Just really focus on things that are right to the point and they give you what you need. Take what you can out of it and then move on and apply what works only for you.
Sweet. Thank you so much.
My pleasure.